But for more analysis on the issue at hand, the sacking of the DG of the Stock Exchange and suspension of the President of the Bourse, is the CEO of Financial Derivatives in Nigeria, Bismarck Rewane. Mr. Rewane, thank you very much for your time. Issues that have been given for all this palaver, as I call it, is poor governance of the stock exchange. It's said to be a fundamental reason for perceptions of the stock exchange not being what it ought to be for the second biggest economy in Africa. Why has there been such weak oversight?
No, I think the intervention of last night and this morning were actually for two reasons. There are two dimensions to this. One was to arrest the drift in the market because of the internal wranglings and failure of governance in the council level of the stock exchange. But the other one was to send a clear signal to investors, both at the retail and institutional level, that you now have an active regulator rather than a passive regulator intervening when there's a drift, and to ensure that the market doesn't actually just go into a tailspin.
All right, Mr. Rewane, these are some of the problems that I'm going to outline right now. There's been ongoing litigation over the election processes of some members of the council. There have been allegations of the exchange being broke and consequently dipping into the funds of a clearinghouse. There are accounts that were not submitted to auditors, and consequently auditors launching a 20-point complaint against the authorities of the stock exchange. Numerous issues which fundamentally are said to be at the core of the market collapse in year 2009. From your perspective, how severe is the crisis that has resulted from bad management of the stock exchange?
It's difficult to say. All of these are allegations, and as long as there were no accounts and no figures and things were not very transparent, one cannot actually jump to any conclusions. That would be conjecture. But I think without prejudice to the investigations or forensic audits that would take place, the regulators had a responsibility to arrest the hemorrhage of confidence and on the heightening of uncertainty by taking some very, very decisive steps to show that they were active and to also consistent with the measures announced by the new DG when she took over office, that there be zero tolerance for infraction, one, and two, there was the objective of restoring investor confidence in the market, which has been badly shaken by a meltdown in the market, and two, a preponderance of infractions over the last 2 years.
All right, now this crisis unfolds in the midst of what was euphoria at the promulgation of the AMCON law about 2 weeks ago.
Yes.
Will this restructuring of the Nigeria Stock Exchange have any impact on the innovations for the banking sector and the AMCON?
No, actually they complement themselves. Strategically, there are three issues that you have to take a look at. One is the AMCON law, which soaks up the toxic assets. Two is the move against the rogue broker-dealers and trying to sanitize the broker-dealer community. And three is the actual restructuring and a seamless succession process in the stock exchange itself. So when you put these three events in context, you'll find that each of them complement themselves, and the outcome will be exactly what is expected. One, a strong and virile market. Two, a process that is transparent. And three, a market in which confidence has been restored.
Let's talk about the cleanup process facing the head of the Securities and Exchange Commission. She has the backing of the president, but it seems like she faces an insurmountable challenge. I mean, to restore capital markets after a $50 billion crash in 2009. We're also told that between 60 to 70% of stockbrokers are deemed to be technically insolvent. Where does she begin her work post this restructuring of the stock exchange?
I do not think the regulator's responsibility is to see the market recover its value. What the regulator is supposed to do is to create an environment where confidence is restored and investors can now bring their money in. If you look at the latest reports, even from the pension funds, you'll find that they are all short equities. So there's so much money waiting on the sidelines, just waiting for the right environment, the right signals that one, the market itself is efficient and transparent. Two, that the broker-dealer community is rid of insolvent and manipulative participants. And that three, that the regulator is willing and able to intervene at any time there's crisis, both to stabilize the market and also to create the environment for further growth. Bearing in mind that even there's a correlation between economic growth in a country and stability of capital markets.
All right, and a final question from you, because Ms. Otey has been quoted in international media, the BBC, as saying one of the things that she's going to prioritize is restitution for investors, some of whom lost 3/4 of the value of their pensions due to some of the shenanigans at the Nigeria Stock Exchange. The SEC is reported to be taking about 260 entities to a special tribunal. Are you aware of any processes, legal and civil, that need to be pursued in order to sort out this mess?
I think the process has started, but what is important to note is that for the past couple of years, there has been no action against anybody. There was an open season in the capital market and a free-for-all. For once, people have been identified, named and shamed, and so that serves as a deterrent to other would-be manipulators, but also helps to restore confidence. So it's a two-way street. One, confidence is being restored, and the other one is that the brokers and dealers who were doing all of these things are also removed from the system. So you have a sanitized market. Those two put together can only be a recipe for growth and market momentum again.